Hey, this is Akash, and today we'll look at which one should you buy, stocks or mutual funds. Now, before going ahead, let's look at what do each of these mean. Now, stocks is whenever you buy a tiny ownership in a company. For example, if there is a company with a value of 1 lakh rupees and it is broken into 100 pieces of 1000 rupees each. If you pay 1000 rupees, you get one piece and you own 1% of the company. So this is owning stock of a company. Now this might be company A. Let's say you own stock of a company A. Now what is mutual funds? Mutual fund is nothing but packaging of multiple company stocks. So you have company A, company B, company C, D, E, and all of these company stocks packaged together and given to you, and you buy them. So when you buy a mutual fund, you are buying a package of these companies. Now who does this packaging? It is done by experts called fund managers. So for now, imagine fund managers as somebody who you have outsourced this work to figure out which companies to package, and you buy these mutual funds as group of stocks. Now, these packaging could be either in large companies like Reliance, L&T, all of these, and they are called large cap funds, or it could be mid-sized companies called mid-cap funds, or it could be small-sized companies called small-cap funds. So you'll be hearing these terms quite often down the line. But for now, mutual fund is package, stock is one company. Now that we know which is what, let us compare both of them across 5 parameters. And these parameters are, number one, we'll look at which one needs more and more time and knowledge to start investing. Then we'll look at returns, very important. Third is risk. Fourth is cost. And finally, we'll look at flexibility. How flexible is it to invest in each of them? So let's look at time and knowledge first. Now, if you are a beginner and you want to start investing, choosing the right company on where to invest is a bit time consuming, and you'll have to have the right knowledge because you'll have to know about profitability, market conditions, interest rates, and a lot of other factors that might affect a particular company's stocks up and down. And that will take some time. It's a very important skill to have, but nonetheless, it is something you'll have to build up for stock selection yourself. But in mutual funds, as I mentioned, it is outsourced to someone called as fund managers. Now, these fund managers are experts in their field. It is their full-time job to choose the right package for you. So they manage a set of over 100 stocks or even more in a mutual fund, and they have the resources, time, skills to do that for you. So it is in a way outsourcing this to somebody else. And because of that, if you are a beginner, mutual fund scores higher with respect to stocks. Now, let's look at the second point, which is returns. Stocks give higher returns. Why? For example, during COVID, when the entire market crashed, the stocks of most of the companies went crashing down. And people who knew at heart that HDFC is a good company, by doing their own analysis of the company, they would have invested their money during that time. And if you see within a span of 2 years, they would have doubled or more than double that money. And this type of returns you cannot expect in mutual funds. So mutual funds is a package of companies, and by virtue of that, the returns will always be averaged out. So if you have 50 companies doing very good and 50 companies doing bad, the overall profitability of the portfolio would average out. And the typical returns we observe is somewhere around 10 to 12%. The second reason is fund managers are typically risk averse. They would not want to lose your money, so they will not bet on something that's probably might give high profit, but might also give the entire portfolio a huge loss. So that is why you can expect a decent return, 10 to 12%, but not as much as if you were to pick stocks yourself. But note, in this case, you have to know which stocks to pick. The assumption is that you would have built the knowledge and time to pick the stocks, and in that case, the returns on stocks are higher. The third point is risk. So risk is inverse to returns always. So in stocks, given that you are picking the stocks yourself, you might be, let's say, picking 10 stocks. If you are picking 10 companies stocks and one of the company goes down, you would have lost about 10% of your money. But if you are investing in mutual fund across 100 companies, if one of the company goes down, you would have lost around 1% of. So clearly mutual funds are low risk. And secondly, Also, the mutual funds are managed by experts, like I mentioned, and they would not want you to lose your money. So we are done with these three factors. Next, let's go to cost. Now, this is very important. For stocks, when you buy a stock, in most of the no brokerage platforms, you would be incurring a very nominal fee for a given transaction. So when you buy a stock, so you'd be probably incurring 0.03% or a flat fee of rupees 20 per transaction, which is pretty nominal. But if you invest in mutual fund, you have to pay about 1 to 2% of the entire investment every year for maintenance. Meaning, let's say if you have invested 1 crore into mutual fund, you'd be paying 1 to 2 lakhs annually for maintenance of that. And now, why is that charged? That is charged because mutual funds have fund managers, they have resources, they put their time, it's a full-time job. So there are overhead expenses with managing your mutual funds for you. And that cost definitely impacts you over a larger period. For example, if you invest 1 lakh for 20 years without any cost, you would have gotten about 9.6 lakhs. But if you invest with 2% of maintenance going out, you would be getting 6 lakhs. The final piece is flexibility. Now, this is my favorite component because stocks are highly flexible. So you are in control of when you can enter the market and when you can exit the market. So if you know the market trends and if you are an expert, you can get returns of 20%, 30% within a month or even more. Of course, you have to know which stocks to pick. There would be some losses, but overall you can get high profits within a short period of time if you know stocks very well. But mutual funds, on the other hand, are designed to be long-term investments. So with that respect, fund managers are typically risk averse to play in short-term swings, number one. And number two, also, if you, let's say, invest in a mutual fund and the market goes up and you want to quickly get out of mutual funds, you'll have to pay 1% exit loan, which is 1% of the money that you have invested if you are getting out of the investment in less than 1 year. So with that respect, stocks are better in terms of flexibility, and that's a big bonus. All right, now that we are done comparing stocks and mutual funds across these 5 parameters, which is the best fit for you? In case you have a goal, for example, buying a house, buying a car, and you cannot risk losing money against that goal, invest in mutual funds, because we saw that mutual funds give decent returns, much better than fixed deposits, and are also safer than stocks. So back calculate the amount of money that you would need to invest every month and start investing in mutual funds. After that, you might have some additional money left. Now, this additional money, if you are a beginner, start investing in stocks in very small amounts, like 500 to 1000 rupees should be enough to start with. Play with this 500 to 1000 rupees per month and try to get higher and higher returns on it. So you might be losing some money initially, but it's fine. Go ahead, play this as a game and try to get better returns on the money that you have invested. Over time, when you get the experience of investing and getting high returns, increase the money that you flow into stocks, right? So later on down the line, whatever bonus is left other than the goal-based investment, you can completely invest in stocks after being upskilled. So all in all, that's what I had to say. Goal-based, go for mutual funds. Stock-based, go for stock investments after you become an expert. That's all for now. If you have questions, do leave it in the comments. I'll be happy to answer them, and do subscribe to the channel for more videos.